Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, September 12th at about 2:30 p.m. Eastern. Well, the NASDAQ Composite and the S&P 500 are notching new highs, new all-time highs today, as the market takes signs of weakening jobs and tame inflation to mean the Federal Reserve will lower interest rates next week. Investors are now gearing up for the Fed's decision on whether it will lower its benchmark interest rate on September 17th, that's next Wednesday. Futures markets are pricing in a 0.25 percentage point cut with near certainty, according to the CME, which is the Chicago Mercantile Exchange Fed Watch tool. And on that cheerful note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, an exciting day we've got here. We're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, again about 2:30 Eastern Time, the SPY was trading at a new high up here, new high, at $658.38, and may make yet a new all-time closing high today. Looks like it could do that. It's trading now at a slight premium to its 20-day moving average, the red line, which is coming in now at $646.07. Its 50-day moving average, the green line, coming in $636.84, so about $637, and the 200-day, the black line down here, at about $597. Now, if we look at this chart, we know, look left with me, we know that the SPY made a new all-time closing high back in February at $613, right back here. And since that time, the SPY rolled over, indeed everything did, rolled all the way down here to its April 7th lows. Everybody made an April 7th low that day, just about. The SPY rolled down here all the way down to 482, then bounced up quickly, bounced up really fast up to the 20-day moving average, but couldn't climb over that. Then pulled back down here to 508, then rallied up, and by then the moving averages were inversed, so it moved up very quickly and made a nice steep angle here, moved back up above the 20-day, up above the 50-day, and yes, up above the 200-day up here to 595, then pulled back to the 200-day, and then, as we know, through the rest of May, June, and on up. As you can see, the SPY has been trading at a premium at times to its 20-day moving average. We know that can't last forever because it just doesn't. Price doesn't do that because sellers come in. And then since then, it dropped a tiny bit in the first part of August, moved back up to over its 20-day moving average, and continuing to use that as a staircase pretty much. We had one quick day down a couple weeks ago, but using this 20-day moving average as a staircase all the way up to the highs where we are now, again, right at 658 and change. And from this low in April down here that was so traumatic, all the way up to where we are now, that has been a 36% gain. So very, very nice. Very nice, strong uptrend. Again, climbing up that 20-day moving average. And we can see right now, all the way up, we've been able to, of course, draw trend lines, although the 20-day did a very good job for us. I'm not drawing this too straight, but anyway, you get the point here, drawing it under those lows. So what do we have going forward here? All we can do is look at today's highs. So for potential resistance, who knows? So let's say we have resistance here at 658, 660, up where we are now, and just a point or so higher. We have potential support at this 20-day moving average at 646. We have the 50-day down here at, again, at 636. We've got this pivot at 619 right down here. That's a pivot. It could be potential support right there. We have the February highs back here. We talked about that at 613, all the way over there. And then the 200-day, again, down here to 596, 597, which is where this is, and then on down. Plenty of moving average and potential price support should the SPY need it. Of course, I am always partial to any index or stock for that matter staying above its 50-day moving average, but nobody knows the future, so we'll have to wait and see for that one. But again, we're anticipating the FOMC lowering the interest rates this coming Wednesday, so you may want to stay tuned for that announcement. Our second chart today is a daily chart of the Invesco QQQ, symbol QQQ, also making a new high. The Qs follow the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market, including all that magnificent seven, including Meta, Google, Apple, Microsoft, that whole group. Now, when I captured this chart today, the Qs was trading at a new all-time high at $586.87. Of course, when you're making a new all-time high, you're always trading at a premium to the 20-day moving average, which is coming in here at $574 and change. And of course, the 50-day moving average, the green line, which is coming in at $567.96, let's call it $568. And the 200-day moving average down here coming in at $521.70. So what we do now for any other information is we look back at the February all-time highs. Since then, back here, look left on the chart with me, in February of this year, the Qs made at that time an all-time high at $539.52. Then, of course, the Qs rolled over, as I said, almost everything did. Almost all assets did, came down here, and on April 7th, dropped to the low here at 402. Then it rallied up very quickly, like the SPY, couldn't get over the 20-day moving average, so moved up to the 20-day, couldn't get over it, pulled back to 428, then climbed basically back over its 20-day moving average. Again, these were inverted by then. Moved through the 20-day, moved through the 50-day, very steep rally, back up through the 200, and again, the 20-day moving average had moved up by then, and price started using that as a staircase, as a line to walk up the 20-day moving average all the way back up a very, of course, a steep angle at first. Then anything more steep than a 45-degree angle, you guys, on a chart like this is a lot. It's a lot. It's steep. It's real steep. Anyway, so the Qs managed to walk back up their 20-day moving average, fell down for a day here, up to new highs in August, fell down for a couple more days through the 20-day, fell down again. The Qs are always more volatile than the S&P because of obviously of the holdings that are in it, but then walked up here again, as I said, to 586.87, almost 587. So, and from these lows down here at 402 up to where we are now, it's been a 46% run up. So, nobody can complain about that. That's for sure. Now we have resistance here at the highs. That's about all we've got at 586, 587. We have potential support here again at the 200-day moving, the 20-day moving average, the red line at 574. At the 50-day moving average at 568 right here. Of course, we've got price support right here, potential price support. We have February highs right here from earlier that we talk about. So these, the highs and the June high, we have there at 539, 537. Of course, the 200-day comes in again at about 522 and on down. So like the SPY, plenty of potential support should the Qs need it. So we'll just have to see what happens next week. I'm sure it's going to be really exciting. So stay tuned, especially next Wednesday. That's going to be a very important announcement next week. Our final chart today is a daily chart of the iShares U.S. Oil Equipment and Services ETF, symbol IEZ. Has 29 holdings in this ETF. Top holdings include Baker Hughes, Schlumberger, Halliburton, NOV Incorporated, and Weatherford International. And I give you those top holdings in case you might want to look them up individually. I know for a fact from going through them myself today that Baker Hughes has made quite a run up. Schlumberger a little softer and so forth. But I'm looking at this chart because so many other, especially tech stocks, are so overvalued right now that I'm as usual, looking for somewhere. Keeping those overvalued stocks with stops on them, yes, absolutely. But looking for a new place to possibly move in if the timing and the pattern is right. So we're looking at the IEZ today, the iShares U.S. Oil Equipment and Services exchange traded fund. When I captured this chart today, the IEZ was trading at $19.14. The 20-day, the red line is coming in at $18.63. The 50-day is coming in at $18.17. And the 20-day, interestingly enough here, the 200-day is pretty much right on top of the 20-day. The 20-day is trying to cross over it here, which is a positive signal should it go through. Now, what about this chart? You can't see it here, but the IEZ made a relative new high in January at $22. Then it gradually fell, and then you can see it coming into March here on this chart. You can see it coming down to about 18 and change, then rallied up to the 50-day, couldn't get over it, sideways for a couple of days. Then in April, fell real hard, like as I always say, like everybody else, down here to a low at 1445 on April 7th. Then moved back up quickly, but only got up to about the $16 zone here. Consolidated through to the 1st of May, then popped up here, then fell back down. But then what I like about this is that it's making higher lows here. We can see that the IEZ is moving up, came back down and retested this $16 mark right at the end of May. Then from here to here is higher. Is a higher low, right? The buyers are coming in, at least at the moment. It moved up to a very nice jump here, then came right back down to the 50-day moving average, then jumped up again to retest that high right there at about 1850 or so. Came back down to retest just slightly higher, then popped back up here, hit its head on the 200-day moving average, couldn't get over it. But this whole time, it's walking along the 50-day, the red line, walking along the 50-day moving average. Now, it kind of just sidestepped here through August, but then popped higher, and then just kind of walked walking higher, walked up at a premium to its 20-day to where it is now, again at $19.14. The IEZ, as you can see here, and if you look further back, it had a pretty quiet summer. I mean, April was tough on everybody, but right in through here from April on, IEZ had a quiet summer, but it was a positive summer that nobody's paying very much attention to. And I always like that, especially when stocks are overvalued like they are now. I always want to kind of wander around and find a place to go to. It may not be exciting, but you know, making a little bit of money can be exciting as well. So in the I kind of like this chart. We'll see what happens, but in the coming week, if the IEZ can stay above, the 50-day, the green line moving average, and the 20's down here, maybe crossing over the 200, But if it can stay above, all I'm looking at here is the 50-day moving average, coming in at $18.17. We can call it $18 if you want. And if the market is behaving reasonably well, I will buy a small position of the IEZ for my trading portfolio. And I'm going to put my stop down here at 1775, just below the 50-day moving average. Now, if and when the IEZ can move higher here, and if it moves up and over the, say, $20.20, and if I can draw a straight line here, I'll try to. If it can move up and over and close above that, by then I'll be adding to my position. And of course, by then I will have a trailing stop. So you may want to keep an eye on the IEZ in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, this is a great time to check out my timeless training programs. In my training program, Trade the Trend to Profits, that might even work here with this IEZ. You'll discover an easy step-by-step process that tells you how and when to enter, manage, and take maximum gains from long-term trades. They're known as trend trades, position trades, or core trades as well. And with this strategy, you can earn good profits without having to stay glued to your screens all day. Our new price for this program is only $127 for Trade the Trend to Profits. And by the way, some of my trainings listed here are priced at only $59. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So, from our ever-popular 7 Steps to Successful Trading to how to swing trade successfully, a very, very popular program as well. Again, Trade the Trend to Profits, how to read charts, great for short-term traders, and novices, 3 winning setups, also great for short-term traders, and how to bottom fish like a pro, one of my favorites. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.